You're watching Money Talk Viewpoint, and I'm Chantel Leeson. Successful businesses have one very common factor, and that is they have an ongoing stream of the right prospects who become clients or customers. And that's good marketing. And that's what we do. Reach out to one of our specialists today at moneytalkviewpoint.org. Let me have our first guest on for the day. And actually, he's our only guest for the day. He's also a co-host on our show. And this is Stuart Kruse. Stuart is a chartered financial analyst, a Quant Investment Advisor, TED Talk speaker, published author, a venture capitalist, and he's the CFO for Virtual Family Office. Stuart, thank you for being a co-host, but thank you today particularly for sharing yourself with our audience. How are you?
I'm doing great. Thank you for that lovely introduction.
You know, actually, isn't that Warren Buffett style, though? He's a value investor. He's for low PE stocks.
Yeah.
And I think it's just after many people saw the movie called Wolf of Wall Street. That was the exact opposite.
Exact opposite.
That was the highest PE you could find to get churn and burn type of process.
Exactly right.
And that's the kind of person you don't want.
And so buying these kind of stocks and making these investments are certainly not sexy. And you're not going to be in the locker room or on the country club talking about, hey, I bought, I don't know, Tesla. Like Tesla is a very hard stock to value on its valuation. And so according to my methodology, I'm not saying Tesla's a bad stock or a bad company. It's iconic, right? It's amazing. But from a valuation standpoint, you tend to not be able to pick a Tesla in there. So I might miss the Tesla and I might have some very boring stocks, but over the long term and as a basket and group, I will tend to outperform because for every Tesla that is this, high flyer, you get these fallen stocks that just crush the value of the overall portfolio. It's really hard to keep up with when you have these things that fall 60, 70, 80% sometimes, like we've seen in this current environment.
It's only for short-term investing, you're buying stocks that have very high PEs. But I think you're looking at long-term stocks, you're looking at generational stuff too. You're looking at not only paying your kids' college education, but you're also looking at things you pass down to the great grandkids you'll never see.
Right.
Yeah, like building really quality portfolios. You're a virtual family office. Can you share with the audience, they need to understand what is a family office, first of all? And I'm sure that financial advisors who are listening, and there are a lot of RIAs, registered investment advisors who are in a private practice. They don't really know the difference in what it is, but can you explain to us the difference in a family office and then a virtual family office?
Sure, glad to. Great question. So thank you. Family office, I believe it was started with the Rockefellers, right? So they had so much money, they hired financial advisors and estate planners and CPAs and private equity people to manage their money and their investments and to ensure that their assets were basically in the best possible hands and being able to be used efficiently and effectively with all those team members working together, right? Now, when I was managing money, when I first started off, it was just me and I'm just focused on investing. Like I am just investing, like give me your portfolio. I can manage, give me $1 million portfolio. I will manage your money. And that's all I'm doing. And if the CPA called me and said, hey, I need the capital gains and loss report for the year, I would send it to them. But there was no real collaboration, right? So a family office is, I have a family amount of money that is so large that I can afford to hire a team of professionals that are working together in conjunction to make my assets reach its full potential. All right. Now, if you're working with somebody less than, I'll call it $500 million, even $200 or $300 million, like $100 million, you can imagine if I'm hiring teams of professionals, that payroll is going to be in the millions, right? So you can't quite afford to have all those people on board unless you actually have $300, $400, $500 million and up. So for clients that maybe have even 50 million, they can't afford their own family office. So what a virtual family office is we bring all those people together on a platform and give the client access to them on an as needed a la carte kind of basis. So my clients that I work with are generally millionaires, and they certainly don't need the services of a family office 100% of the time. But most of them need some of those services some of the time. They have they might be making more than $1 million a year. So they have tax mitigation opportunities. They might have a bunch of real estate, so they have cost segregation studies that they might need. They might own their own businesses, so they might need to have buy-sell agreements or business valuations in place. They might need premium financing or a variety of other structures that I do not take care of. It's not in my investing lane, but my clients certainly need those services. So a virtual family office is basically, can I provide those services on an as-needed basis? And then we pull in the CPA and the estate planning lawyer and whatever experts we need on the outside, and we work together as a team. Because me working in my own little silo with a CPA working in his silo is going to be less effective. It doesn't matter how great we are at our individual jobs. If I can get together with the insurance guy and the CPA and the estate planning lawyer, and we can come to a conclusion as what's probably the best for the client. Like I might present an option for the client, and the CPA would say, hey, it's just not going to work for him because of XYZ that you don't even know about. Okay, awesome. Then let's pivot to a better solution. What do you think will work? Well, this might work. Okay, well, we have this other expert that we can bring in. Let's present that solution to the client. And we're working as a team, just as if the client has their own family office in that moment. So that's what a virtual family office is.
You know, the good part about that is that there are a lot of small businesses, and not even that small. They may have 50 to 100 employees who are probably worth 40, 50, 60 million dollars, not at the $100 million level yet. Maybe they're 25 million on their way up the ladder. And that's what happens is that they piecemeal it.
Yeah.
They have the financial guy over here putting money into a retirement account or whatever else they're doing. They have the insurance guy doing things for him. The CPA does something else, and nobody knows what the other guy is doing. And they're afraid to share that advice.
Right. It's so easy to get into that mode of just, I need to protect my little fiefdom, right? And quite frankly, that's how I used to operate. It was much easier. Like if I had an insurance person present something to my client, then I'm losing business, right? I'm just actually losing business because the only thing that's going to happen is I'm getting assets taken out of my pool of management where I'm billing from, and it goes off to insurance. So what am I going to say? No, go ahead and buy that insurance. I'm going to say, no, it's not good for you. You know, it is the worst thing for you. You should not buy insurance. Now, maybe they have a bunch of kids and they need to have the insurance in case something happens to them, and it is appropriate for them. So in this model, you're bringing everybody on. And same thing, I like have several examples of what you said. And if you're not incorporating and bringing everybody in and working on the solution, then quite frankly, you're probably not doing the best thing or acting within the best interest of the client. And I am, in theory, a fiduciary. And so as a fiduciary, I am supposed to act with the best interest of my clients in mind. But if they're bringing me things that are conflicting to my financial advancement, then I'm conflicted. So what do I do? Well, the best solution now is to bring everybody in. I could argue that if you are not bringing everybody in, that you are not acting as a fiduciary for your client.
Not only is that right, but you know, you'll find a person who's gone to someone who's a CPA, but he also sells insurance and mutual funds on the side, or maybe he's a tax attorney. Yeah. That's not a family office. That's one guy making all the decisions. Some people think they'll tell me, you know, I've got all that already, and you'll find out he's got one person doing everything, and that you need to have those different minds that work together in a collaborative effort to bring the best results for the client, and that really is a big difference.
Yeah, I mean, think about like, how are you going to be the expert in everything? If you're, let's say, I love to use analogies. You're sick. You're not going to go to a generalist doctor to have your brain surgery, right? I mean, or have your knee surgery. Like you need somebody that's specifically the anesthesiologist comes in, you know, the nurse practitioner comes in, everybody comes in and does their particular job because they're good at it. Now, probably that general practitioner pretty much knows how anesthesia works, pretty much knows how these things should go, but is that what you really want for your assets? You want somebody that's kind of this general practitioner that has a vague knowledge of these things, or do you want an expert? Like the tax code's 75,000 pages, right? And so our experts are experts in a few hundred of those pages. They're just really good at what they do here. So if you're selling your business for $50 million, I may have a good idea about some estate planning tools that you might use, but I'm not going to know exactly what that is the best thing for that particular client. So we bring in an expert in that area. And then to invest the assets that are going into these various trusts, you might have a CPA that knows that you can buy some mutual funds and do an allocation, but are they really going to know how to maximize the returns of that portfolio? I would argue probably not.
But let me ask you, one, I want clients to know